This strategy that I'm about to show you is the best ever one that you will ever see in your life. So make sure you listen so carefully, because it works on GBP USD, Euro USD, and many more pairs that you currently use. Okay, so let's get straight into it. Only trade within the London kill zone, which is from 7 a.m. until 11 a.m. And yes, this is the silver bullet strategy. Also, what I need you to do is mark out the highs and the lows of Asian session, and we need to identify which part of price is mitigated. Let me tell you exactly what this means. So we mark out the highs, which is right here. That's the highest point of Asian session in this range, and this is the lowest point of Asian session in this range. So what we need to do now is identify which part is mitigated, which means we're just going to be letting price do whatever it wants to see which part of price actually gets mitigated. Let's say it's the top right here that gets swept. That means we're going to be aiming to take the trade towards the downside, and we're going to be putting short positions from here, okay? But if we were to say that the lows have actually been swept, so let's say the trade went like this and then it went back up. Okay, so let's say the lows have been swept right there. This will be our liquidity sweep, and then we would aim to take the trade towards the upside. Okay, it's so easy and simple. Let me just show you right now. So if I play price forward, I'm gonna see where it goes. There we go. So we've completely swept the highs now, and once it's swept the highs, it's very simple for what we're going to be doing from here on out. Okay, so first of all, let's mark our liquidity point right there. Is our liquidity point. Okay, after we get the liquidity point, all we need to do is find a breakage of structure where fractional highs / lows have been swept, and we can reinforce our market structure shift in an engulfing candlestick if possible. What we need to do now is find a breakage of structure. Let me show you exactly what it looks like. So let's say price did one of these moves, and then it would have broken itself. So you can see right here, this will be counted as a breakage of structure right there. Okay, this will be our market structure shift. So we need to find a similar move towards like this one. Okay, so now if I play price forward, we're going to be looking for a similar move like that. We still didn't get one, still didn't get one. We're still going. Okay, there we go. We just got a very engulfing candlestick from the candle before it, and it's completely swept this fractional low. Okay, so once it swept this fractional low, and let me tell you why this is actually a fractional low just in a minute. So once it actually swept all of that, now what we need to do is very simple. This is our market structure shift, but before that, so you can see the candle right here, we make this our low, fractional low, because the candle before it and the candle after it did not go below it. Okay, if it went below this wick right here, then it would have never been our fractional low, but since it didn't go below it, it is our fractional low. Okay, so from here on out, it's very simple what we need to do. Let me just mark this out as our market structure shift. After this, play price forward again so we can get the fair value gap entry, and now it's so easy what we need to do from here on out. We need to identify a fair value gap, and we need to overlap this with a market structure shift for a higher probability and execute the trade. And you can see the market structure shift already here is overlapping with this gap that we have, and now all we need to do is mark out the fair value gap. But just before that, if you're still struggling with your prop firm account and you struggle to pass it even phase 1 or phase 2, and you can't even get your foot in the door of being funded, I've got the perfect solution for you. Okay, with my SkyPass, I completely get people funded and get them a payout. Okay, you can see Soma right here today. He actually got announced in our group because he got a payout recently of £1,400. Okay, this is so powerful. The service that I'm giving is so good because I will pass your phase 1 and phase 2 of your evaluation. Also, I'll manage your account for free after that, making you consistent profits, and you get to keep 100% of the first payout that you get with me. Okay, you can check this out, group out. Make sure you click the first link in the description, and I have a free slot for first 10 people that join from this video. So make sure you go as fast as possible into that first link and join the group. But anyway, let's mark out our first FVG. So this will be right here. This is our fair value gap. So now let me just put a text. It's our fair value gap, and once we actually got this fair value gap, now it's very simple what we need to do from here on out. All we've got to do is overlap it with a market structure shift for a higher win probability, and then we execute the trade. So you can see it's already overlapping with the market structure shift, and now all I'm going to be doing is placing my swap position at the bottom of this highlighted area and placing my stop loss literally at the top of it. Okay, we're going to make it very tight today, and we're going to be aiming to take this liquidity around here. Okay, you can aim for Asian session liquidity, but that's too far for me, so I'm going to just aim for this side of liquidity. So it'll be a 1 to 4.6, right? This will be an amazing trade once we actually run it. So now, if I play price forward, you can see it's entered off of there, and it's entered again, and it's going down, and it completely just smashed our take profit. So you can see this strategy works in such a good structure where it always will win no matter what. Okay, let me show you another example right now. All right, so now we have the next example, and this one is so much more complicated than the one before, so you got to listen very carefully. So we need to mark out the highs like we just did. This is the highs and the lows right here. Okay, so it's a very, very gradual increase of price, right? So what we're going to be looking for now is the reversal, because when the reversal hits, it will hit very, very heavy. So now what we need to do is pay close attention to where the price will go. So if we play price forward, and there we go, you can see it's just completely swapped the highs. So this will be our liquidity point. Once we've got this liquidity point, all we've got to do now is very, very simple. So we need to find out a breakage of structure where fractional highs / lows have been swept, and we can reinforce this market structure shift to an engulfing candlestick. So now I'm going to play price forward until price eventually decides to take itself out. There we go. So this is the point that we're looking at right now, and there we go, it's completely gotten swept. So this is the point that we were looking at, and it completely gotten swept by big candles. Okay, big engulfing candles. So now what we need to do, this is our market structure shift first of all. So once we got the market structure shift and we got the everything, we need the fair value gap now. Okay, we need to identify a fair value gap, overlap this with the market structure shift for a higher probability, and then we can execute the trade. Okay, you can see the fair value gap area right here is so clear. Be from here to here, and this is our fair value gap area. So all I'm going to be doing now is placing my sell position right there, placing my stop loss at the first candle of the FEG, and placing my take profit at 1 to 3 reward ratio. You might be asking, oh, why do you have specific points where you don't actually put the stop loss all the way at the top, and sometimes you just put it at the highlighted area? Okay, all of that you can learn it in my mentorship. Okay, it's in the second link in the description. Just go check it out. You don't have to buy it, just go check it out and see if it fits for you, because it doesn't really fit for everyone. But anyway, if I play price forward now, I'm gonna see how it actually runs up. So you can see it's going back up. It entered the area just now, so it's entered our price. Now we're looking for it to go all the way down and smash take profit, and there we go, it's completely smash take profit. If you tell me this strategy doesn't work and you're still not using it, I don't know what you're doing, because you'll never become profitable in your life. Let me show you on a fundamental level how it works. Okay, let's say this is Asian session, let it do whatever it wants. Okay, Asian session is doing whatever it wants, but once it hits that specific trading time, which will be from 7 a.m. to 11 a.m, right? Once it hits the trading time, now we need to mark out the highs and the lows. So the highs right here are marked out, and these are the lows, right? So we're going to be seeing which side of these liquidity actually gets swapped. We're not going to be flicking back and forth with this right here, because I want you to actually learn this by heart. So all we need to do next is very easy, figure out which side gets swept. So let's say the lows are gotten swept, because it hasn't gotten swept yet in this video. Let's say the lows have completely been swept there. All we've got to do now is actually aim to take the trade towards upside. But before that, we need to find a market structure shift towards the upside. So we're going to be finding an action like this, where price actually breaks on itself and gives us a market structure shift, just like that. So this is our market structure shift. After we got this market structure shift, we need to look for the fair value gap. Okay, so we're gonna get the fair value gap overlapping with the market structure shift, and also this needs to be with an engulfing candlestick, right? And after we got all of that, everything's ready. We're just gonna enter our position, long position, right here, and we're gonna be putting our stop loss at the first candle of the FEG or whatever, and placing our take profit either at the Asian sessions highs or a 1 to 3 risk to reward ratio. And that's what I'm going to be doing in this video. So now if I play price forward, it's going to come back down, bounce off this fair value gap, and completely smash my take profit. This is how easy this strategy is, and this is exactly how I've explained it in this example right here. Okay, so you can see Asian sessions highs and lows. Highs have been swept. After that, we got the engulfing candlestick, which took out this area right here, which gave us the market structure shift. And after it gave us the market structure shift, we easily identified the fair value gap, which is right here. So we just mark out. We easily identified the fair value gap, and then we just entered off of the fair value gap. Okay, and this is exactly what we did here too, and it's completely gave us the win. And it gave us the win here too. If you're not using this, I don't know what you're doing. Start using it now. And if you want to get funded today and work with me personally, I will manage your account. Make sure you join my Sky Pass. But anyway, that's going to be the end of the video. Make sure you watch the next one, and I'll see you in the next one.